Hey, good afternoon, everyone. This is Forex Brizio. It is 4:20 p.m. on Saturday, April 22nd, 2023. Hope you had a great week of trading, and just coming back to you here with a quick video just to review just a couple of trades and show you some that went well, some that didn't go so well, and why that is, and just take a really quick look at the news calendar coming up for this coming week, because there are a couple of things you should be aware of, whether you're a fundamental trader or trade, quote unquote, trade the news or not. These are still things you need to be aware of because they definitely affect volatility in the market. Okay, so let's get right into it here. So we're looking at the pound Kiwi here, and you can see we've been in a very nice uptrend here. And this week we had some Kiwi news earlier in the week. I think it was Kiwi CPI news. Yeah, it was Kiwi CPI news that came out on Wednesday. And you can see it came out lower than expected, which is technically negative for the currency. So this is the candle here. So this was during the Asian session when it came out. And you can see the Kiwi rallied, and then we sold off later in the session into the London session, okay, and then even into the first few hours of the New York session. This right about where my cursor is about 3 hours into the New York session. So this is all of the London session and the very beginning of New York and the tail end of the Asian session. So price rallied through, and then the rest of the time kind of sold off. And this was a perfect setup for a re-entry because, again, we talked about, higher highs, higher lows, so definitely trending up. And we're on the 1 hour chart here. Impulsive move up and then a slow corrective drag lower. Now, I didn't Fibonacci this, but I suppose we could throw a fib on here. That's looks like it's maybe a 50% fib. And yeah, it's basically, I actually just kind of touched the 61.8. So if you like Fibonacci, you could use that as a confluence. And you can see what happened here. So I was looking at this as a day trade during the New York session, and I saw this impulsive move up. I did not trade this because I don't trade the Asian session. I didn't even really see this till the next day. And then, although this would have been a good entry though, because we had this pullback here, this would have been your entry right down here. But like I said, I didn't see it. I don't trade that session. So, anyways, but in looking at things during the early New York session, I saw the impulsive move pullback. So I went to a shorter time frame down to the 15 here, and again you can see this. And I believe the way I had done this is just I trend lined to this. So as soon as price broke above here, I took the long. Now you can see that I left a lot on the table, and I told you guys this in a lot of my videos. This is one area that I need to work on. Part of it is because I usually don't hold my trades overnight, so wherever they are at the end of the day, I just close them. In this case, yeah, this is actually into the next Asian session. This is about 9:30 p.m. New York time, so into the Asian session the next day, and I closed it here at this high. Price then chopped around, went up, just really bounced around. And so, again, this is on the 21st. And then you can see we went all the way into the New York session the next day, and then we had another entry here. I did not take this. Honestly, I don't even know if I was looking at it. So, whatever. But, I could have held through all this. There's a lot of choppiness here. I don't know. I really don't have any problem with closing this because this was really choppy in here anyways, and I didn't want to get caught up in this. But this right here would have been a good re-entry, but that's besides the point. But anyways, how I really wanted to just point out the entry again is just recognizing trend, right? Higher highs, higher lows. You can see, a pullback into a nice zone here. And it wasn't a full pullback back down into this area here, but basically what I did was once I identified impulsive move, corrective move on this time frame, I just went to the lower time frame and just waited. And as soon as it was clear that we were breaking through these trends, through this trend line here, and re-engaging in the uptrend, that's when I entered. Ideally, what I would have liked to have seen is price to come all the way back down, into the origin of this area right here, the origin of this move up, so down into this zone right here. But we never got there. We never even got close. And this can happen when you have a really strong trend working, that it might not get, into that full retracement of that initial zone. Okay, and it kind of instead came back to essentially this zone, what was previous resistance now being support. And again, this was a Fibonacci right here, as we measured it before. This right here was represented the 61.8, and this is where I got in. And you can see this little red dash. That's where I had my stop loss placed, and this is where I got out up here. So, it was a good trade. Now, like I said, I left probably half of this on the table, but it was a good trade. And you can see we're in a nice uptrend here on the 4 hour. And so, if you look at the daily chart, we are coming into an area of pretty good former resistance up here. So I'd be a little cautious re-entering longs right here. And if you swing way over to here, this could be a potential zone right here for supply. So I'd be cautious re-entering any more longs at this point. But if we get past that, then certainly I think there's more room to the upside. You can see on the weekly chart, we're coming back into some area of resistance up here. But anyways, just talking about this trade, I just wanted to point that out. And again, it's simple price action using structure in liquidity zones and waiting for a good value entry instead of chasing the market and buying on this strong news candle, trying to buy in here or buy in here. Instead, take your opportunities during the pullback phases like here and let these things run. Okay? So let's show another one here. How about pound Canadian? Very much like pound Kiwi. Again, in an uptrend here. We have an even larger entry here. So this is the entry I'm talking about up here. But if you look at this area here, strong move up, this three-wave corrective pattern back down. Tap this zone down in here. For a 4-hour trade, this was a perfect trade entry right down here. We had a false breakout on this candle right here, and then we came right back with a strong candle, and then we kept going up. And we can probably, you can see it on the daily chart. I actually like it a little better on the 4-hour chart, because in real time, you would have seen this. Now, this actually probably would have been an entry for a lot of people too. Push away, come back, tap this zone, went up again. You can, target these highs, have it come back down again, and then you have a Nella shot. So it was probably two trades in here. Impulsive move up, retrace, impulsive move up, retrace a little further back into this zone right here. Okay. You can see we tapped it the first time, and then the second time we came back really deep into it, basically back to this low. So this was actually the real entry, although this could have been an entry right here too, but this was your real entry. So I actually took a few trades in here, but this was the last one. And again, it was just based off of higher highs, higher lows. We see price come down, retap this zone here, and then went up. Here it is on the 15-minute chart, right? Price revisited this zone right here, okay? And then I just waited for price to break out a little bit, got in right here. Okay, see the clear bounce off the zone, okay, and then up. All right, so that's that one. And kind of like the pound Kiwi, we are coming into some pretty strong resistance up here. This is actually probably the third test of this resistance, so I'm a little cautious. But if you go out to a weekly chart, I think there's definitely more room to run to the upside. So I'm a little bit more bullish on this one, even in the short term, just because I think we could keep running this one up, at least back up into this area or this area up here, which is still 500, 700 plus pips away. So I will be looking for pound Canadian re-entries potentially going into next week. All right, pound yen, again, kind of the same thing. So here we are on the 4-hour chart. Again, higher highs, higher lows. You have this pullback. This was an entry way back here. You can see, this pullback into this zone right here. Okay. But this is the one I wanted to point out. This is the one I saw. I still have the horizontal line that I had drawn out earlier in the week. Impulsive move up. We had this demand zone left right here. Okay. Price came up, ran all the way back down, tagged it perfectly right here. This is the 4 hour. We go down to the 1 hour. You can see it perfectly. Okay. Came down here. All right. And I saw this pin bar here on the 1 hour chart. Down to the 15, you can see bullish price action, reversal right here, and this is where I got in. And this was Friday, so I didn't want to hold this trade into the weekend, so I closed it right here. It did drift a little bit higher into the later session on Friday, but you can see it was a pretty good trade. It was about 72 pips. All right, and so it's a good trade. So now this one, I think, has a lot more room to go to the upside. I say a lot more. At least to here is a minimum zone to look for. And then up here, there's another zone. So I think I'm still looking to be bullish. And this actually, to wait for a pullback here on a shorter time frame on this would be a good area to look for. Now, we do have some important yen news coming out this week, so later in the week, so that's something to definitely keep an eye on that, could definitely have an impact. Now, I know the market will be watching that news very close, and we'll talk about that in a second towards the end. So a quick review of a couple that didn't work out. So this is dollar Canadian on the daily chart. 4 hour chart. I took this short position. Now, this one probably would have worked out, but it violated my rule, so I ended up closing it because at the time, obviously in hindsight, probably was a decent trade back into this zone. But this is the area that really I was looking at. As you can see, I drew this zone in here. You had price come back, and I was waiting for price to tap into this zone and take the long position here, and I didn't, so I took a small trade here. I obviously could have held it back down in this zone, but the reason why I closed it is because it violated my rule and I didn't feel comfortable holding it. So it's just one of those things, guys, where sometimes you might lose out on a trade, but if it doesn't capture your rule, then it's probably not worth doing. Because in the short term, you might have a winning trade, but maybe you're creating a bad habit. And especially when you consider that this is going to go up, this little move down, okay, would have been great. But to compare this move down, which is about 170 pips, to the potential on this trade to go back up to these highs, which is 400 or 500 or more pips, you can see there's a lot more potential here for this to push to the upside than this little move, taking a risk on this little move down. So I just wanted to point that out. Pound US dollar. So kind of a similar situation. I did take a short here. But again, this one I closed out right at this low. And if you zoom out a little bit, it's not into a zone. You can see again, I have this line drawn here. Move up, came back, retapped this area. And then, we started pushing back up. And then we've come down and retested again. But I do think this will go higher from here, and at least back to these highs, if not higher. If we clear these highs, then there's really a lot more room to run to the upside here. Okay, so I just wanted to point this one out because, again, it didn't follow my rule, and these are really my structural rules I'm waiting for. Okay, and then the euro. This was, again, another one. You can see these are all against the dollar. That I saw some, dollar weakness on these three pairs. So again, for this pair, you can see on the 4 hour, we had this big move out of this zone. We came back down. We did not come back into this zone at all. We've just been moving sideways. So I wouldn't be surprised if we see this come back down off these highs, eventually come back into this zone and then move away. So if I'm going to follow my rules, guys, this is what I'm looking for. Now, potentially, there's also maybe a zone here on a shorter time frame, say on the 1 hour, where price could just come down to this area, okay, and then bounce from here. So I will be watching both of these zones next week. I do expect price to sell off, come back at least into this zone. I'll see what happens when it gets back towards here. If we have any real strong bullish reaction off here. But I wouldn't also be surprised if this closes back through this level and then continues down, and then this would be the target area I'd be looking for a potential long, somewhere in here, okay? Either right at that low or, somewhere around here as a zone, okay? So, but this was another trade. It wasn't a loser, as you can see. It was actually, this one was a loser because I went short here, got out right here. And again, it was a loser because it didn't fit my narrative, right? But I took it anyways, and I quickly got out of it right here, okay? On this, like I said, on these other $2 ones I showed, this actually, even though it didn't meet my criteria, I did take a small profit on this one, on the pound dollar, and then on the pound Canadian, which is the other one I just showed you before. They didn't follow my rules, right? So it's just the point of all this, guys, is to show you that this is a great methodology that I've been using, and again, it doesn't require anything on my charts except the price. I don't need any indicators, oscillators, moving averages, nothing. I'm just using structure zones. I'm identifying trends in structure zones and trading off of there. And, of course you can do this to the downside too. These all happen to be trades to the upside, but you could easily just do it as easily with down moves as well. I was trying to see if I could just find one. You can see like structure here that I had on the CAD Swiss. We had this move down, price came up, and tapped back into this zone. Didn't quite make it here. I had a couple of zones drawn out. I did not take this trade, but this was a potential area. The CAD yen. I did want to show you this one. So if we just draw out structure here, you can see on the CAD yen, again, the 4-hour chart up, came right back, tapped into this, and pulled away from this area. Now, we did pull back here, but again, this was Friday. We blew right out of this area, okay? And so I am going to be looking to resume long positions on the CAD yen, at least the beginning part of the week, okay? Because you can see this is a perfect retracement back into the zone, a dead clear rejection, bullish price action here on the 1-hour chart moving out of here, and I expect this thing to keep going up, okay? So this is the type of setup that's golden for me, and these things should pop right out at you on the chart, okay? And by the time they develop is when they become really clear. When they're almost complete and the entry is close is when you're going to notice these, because this went up, and then, at first you're like, okay, well, it's going down here. You don't really know what it's going to do. But as it comes down, these zones should pop right out, and you can see the impulsive move up that it's coming back into. This is, if you're, again, a supply and demand trader, this is a demand zone. This is a liquidity zone, whatever you want to call it. And so these should stand right out at you, and I love these. I mean, these are like golden setups because they're low risk, high reward. If you get into this long, right, all you do is take the long, whenever you feel like you want to. You put your stop, a few pips below this swing low. I probably give it maybe at least 10 pips below this low in case it comes all the way back down and retraces. You don't want it to, wick down here and take you out if you have your stop right against this low. So I'd give it, 10 pips of breathing room here because this is a 1-hour chart. And you just let this thing fly and you at least target back up to the previous high. So this is a golden setup for me right here. So I take a picture of this. This is what I like to see. And my preferred time frames for this to see these setups, guys, is the 1 to 4 hour time frame. And then if I want to drill down to like a 15-minute to fine-tune an entry, I can do that. But I'm really looking for these, like I said, guys, on 1 to 4 hour charts. Okay, and if I'm not sure, if it's not obvious, then I just don't trade it, right? And the thing is with these guys, once it gets going, because of my methodology, if I don't, like, let's say I didn't take this entry, then I'm not going to trade anything. I'm not going to see these entries going up here. Okay, I'm going to wait for this bigger pullback. If you wanted to go to a really short time frame, you could probably find little entries like here and right here, but I want the bigger play, so I'm willing to wait and be patient for these type of setups on the higher time frames. Not really high. I mean, 1 hour is not really a high time frame. It's kind of a moderate, low, moderate, and then the 4 hours kind of like a moderate length time frame. You won't get as many setups, but they'll have bigger reward potential in terms of how far they'll go, and you can still have relatively decent risk too. Okay, so this, and again, you can play this to the upside or the downside. If you took this whole chart and flipped it over upside down with price going down, and then price doing something like this where it goes down, okay, just the opposite of what you see here, right? So price goes down, comes back up, taps an area, right? And then that's basically what we had here, right? So we went up, here we went down, okay? And then here we went down, this went back up. And then, you're looking for a price zone right here in order to trade this thing back down. So it's essentially the same thing, right? You just take what you see right here, flip it over, and you would do the same thing for a downtrend, right? I think visually it's a little easier to see it in an uptrend, so it's a little more tricky in a downtrend because it's just you're looking at it basically upside down, and you have to just train your eyes and your brain to kind of be able to see these things in reverse. So I think they jump off the page a little easier on uptrends, but it's the same exact principle to the downside. Impulsive move down, wait for a correction to come back into that zone, and go. Now again, sometimes like I showed you on whichever one it was at the beginning, the pound CAD or the pound Kiwi, sometimes it won't go all the way back. Sometimes it will stop, right? If it's really strong, the retracement will only come to a certain area. So that's why you have to be a little flexible, and you might potentially miss some trades. So you have to watch these areas, and this is where maybe your Fibonacci would come into play, right? Say, okay, well, I'm going to put a fib on here. I'm going to watch the 61.8, especially 78.6. These are my two preferred golden zones, 61.8 and 78.6, and watch those two zones. And if prices easily blows right through them, then I'm very confident it will come back fully into the zone. But if it stops around something like the 61.8, 78.6, and you see really impulsive move out of there, that might be all you get for this thing to then turn down. So you have to be flexible. Sometimes you will miss these trades if you're waiting for them to come back into this zone, but a lot of times they're going to. But like I said, occasionally they because there's so much selling pressure, they don't make it all the way back, and you either might miss that trade or you just have to be flexible. And again, this is where your Fibonacci's might help you, because if you start to see impulsive action out of one of these zones before it gets back to your main zone, then this is where you can throw a fib on and say, okay, I see it's sitting at a major fib, and it's kind of a self-fulfilling prophecy for it to continue down from there. All right, but again, guys, it's the exact same analysis, whether you're looking at it on, again, whether you're looking at it as an uptrend or a downtrend. All right, so I hope that's clear, guys. And again, you can do this on any time frame, guys. If you wanted to do this on a 5-minute time frame, look for these zones, you could. It's just that, to me, it gets a little noisy down there, and I'm not sure sometimes the profit potential is worthwhile for the stress of the risk that you're going to take and constantly trying to find those zones. At least if you can, use a little bit higher time frame, they're going to be better quality setups, and you don't have to be stressing out over basically scalping these things out and constantly looking at the short time frame trying to identify a trade before it happens. Where, with these, you can easily scan through your charts a couple of times a day and just make note of setups that could be coming and just sit by and wait for them to happen. And that's it. And eventually, guys, these trends will reverse. I mean, if this is an uptrend, eventually it's going to reverse. So if I had seen price come down to here and, just blow right through this zone impulsively, then obviously that would change my bias, and maybe I start looking for short positions, right? You can see this is a pretty strong zone even on the 4-hour chart. So if we sold through this area, then, I'd probably be looking for having a short bias, at least down to, this area. But I'm not really trading these as reversals, guys. I'm trading them as trend continuations, and I'm just looking for these setups. And again, here on the 4-hour, you can see again on this pair, you had all this move down. People say, why don't you trade this to the downside? Well, you could, but this is still in an uptrend. It hasn't been violated. So I'm looking at this as just a big correction. I'm going to let it play out. And I'm going to look for the long to get me back into this zone and then take me back up. Okay? But certainly, there might have been a trade down on a shorter time frame using that same methodology. Okay? So it just depends how you like to do it, guys. I prefer to let, just use the overall trend as my reference point and wait for price to come back into an obvious zone that needs to be, mitigated and tapped again, and then jump back on board the main trend. And only if that proves me wrong, where it breaks through one of these higher time frame structures, will I change my bias back, again, in this case, down. But that didn't happen, and I do expect this will continue back up. All right, so just quickly looking at the news calendar, guys, a couple of things to point out. And I was just talking about the Canadian yen. On Tuesday, we have CAD CPI coming out. Oops, nope, this is next. That's this week we just passed. We have Aussie CPI on Tuesday night during the Asian session, so this is definitely to keep an eye on if you trade the Australian dollar, and especially if you're in any Aussie trades. Going into this news, CPI inflation numbers in pretty much every economy is really big right now. So I do suspect that this could be volatile, especially if it is way off one way or another on these numbers. So keep an eye on the Aussie on Tuesday night, New York time during the Asian session. And then the other big one is the Bank of Japan on Thursday night, early Friday, New York time. They're going to have their monetary policy statement and outlook. Now, people are predicting for a long time, for months now, that the Bank of Japan was going to start to tighten, and they've been like the only major economy that hasn't really raised rates and tightened due to all the inflation, and they've been very, very resistant to do that. And there's constant thought that they're going to change their policy stance. They made some hints about it about a month or so ago, that potentially they'd be open to some tightening, or at least, pulling back on some of their easing. Because again, they're the only major currency that hasn't, had persistent rate hikes in the last year or so. And so if they come out and, come out with any kind of hawkish statement that they're going to change their policy position and raise rates depending what their outlook says and their monetary policy statement says, and then of course the press conference will be later on, this has a potential to be very impactful for the yen. And on the other hand, if they come out and say, what, we're staying where we are, we're not raising rates, we're just going to keep on keeping on, then you will see disappointment, and the yen will sell off, will keep selling off as it's been doing, and all the yen crosses will rally. But again, if they come to any type of hawkish statement, then expect the yen to really strengthen, because the market's been waiting for this for a long time, and all they need is the hint that they're going to do it, and you're going to see the yen really, really, really strengthen. And I think if they come out and they just kind of leave things as it is, the yen certainly will weaken. But I don't think the reaction will be as strong as if they go the other way and begin to talk hawkish. So this is going to be really interesting. This, to me, is probably the key event of the week, is this Bank of Japan stuff coming up later on. So if you're in any trades with the yen going into this event, I'd be very, very cautious. Okay, I can tell you personally, I will be flat. I will not be holding any yen trades into this announcement on Thursday. So I'm not saying I won't trade up to it, because it's not until late Thursday. So Monday, Tuesday, Wednesday, no problem. And so like that CAD yen trade, certainly that's a viable trade. But if I happen to be in that trade going into Thursday, I will most certainly be exiting it before this news. And we'll see what happens. So those are kind of the two kind of really important things: Aussie CPI, Bank of Japan. Other things, we do have GDP from the U.S. on Thursday morning, and we have Canadian GDP and U.S. dollar PCE, which is another kind of inflation price thing on Friday. So those are important. Most certainly, they'll create some volatility. But I would say the Aussie CPI and this Bank of Japan are probably 1 and 2 for most important for the week coming up in terms of risk event. Okay? So, yeah. So I'm going to leave it there, guys. Any questions, comments on these? If there's any charts that you're curious about, just drop it in the comments. Go ahead and smash that like button, guys. Really appreciate it. Helps the YouTube algorithm, and subscribe to the channel down in the lower right corner there. And ring that bell notification so you get notified when I post new content. And again, if there's anything you want to see or hear me talk about, if you're interested in a live session, I have some software now where I can do live sessions, and we can go from there. All right, guys, so I'll leave it there. Have a great weekend, and we'll talk to you next week. Take care, guys. Thanks.